So welcome back, friends. The US markets have rallied stupendously on the back of the Donald Trump victory, which is believed to be pro-business, and his intention to cut taxes is definitely something which has attracted the attention of Wall Street, and you see the stocks flying through the roof. Dow Jones, S&P, and NASDAQ all now at all-time highs, and they have even gone even higher this week. Almost 80% of the Americans who said that the economy was their number one priority at the exit polls in Tuesday's US election voted for Donald Trump. Now, that might perplex outsiders. After all, the recent performance of America's economy is enviable. Growth is solid, inflation is easing, and the jobless rate is quite low. But the national strength belies local pockets of weakness. Households have been stretched by the 20% rise in the price levels since January 2021, which means just a little after Joe Biden took over. Rent and healthcare costs are harder to cover. Credit card debts are mounting. You have the interest rates have been phenomenally high for quite some time, until the Federal Reserve started cutting in September. And of course, now there's another 25 basis points cut in the month of November. The over 70 million Americans who voted for Donald Trump are optimistic that their fortunes will now be turned around, that the difficult times are over, and that all will be hunky-dory from here onwards. Now, stock market is rallying, and that is feeding in the feel-good effect. The president-elect's plan to cut taxes and his coating of the tech bros has Wall Street and Silicon Valley, the twin engines of the US economy, really up in happiness like never before. Trump has good vibes also on his side. He inherits an economy which is in pretty good nick. The US economy has the US Federal Reserve has embarked on the interest rate cutting cycle, and that's what he wanted. After all, interest rate cuts does help in reducing the cost to service debt. It helps you to take, in fact, more debt, right? And therefore helps the US consumer. Also, their old debts, if they are on a fluctuating basis, a variable rate, then they feel happier because they can service the debt at a lower rate and reduces their cost of borrowing substantially. However, would this be in the backdrop of a possibility that something may go wrong even with such good and noble intentions? It is quite likely that some of the policies could jeopardize the optimism and favorable economic backdrop, depending on how much Donald Trump actually follows through with his proposals. His plan emulates his first term but on steroids. He wants to extend the tax cuts that he enacted in 2017 and slash levies on business and on pay. On tariffs, what he calls the most beautiful word in the dictionary, there could be a 10 to 20% bill on all the imported goods, with 60% for the Chinese imports. The largest deportation operation in American history is also on his agenda. Whatever form it takes, the gist of Trump 2.0 is that inflation, borrowing costs, and national debt may be higher, not lower, relative to the baseline. Tax cuts could support growth, there's no doubt about it, but they could also raise the fiscal deficit. Tariffs will feed through to retail prices, and a lower labor supply because of the strict immigration rules that Trump intends to enact could nudge up price pressures. Such is the irony of voting for the Trump in anger over the high cost of living. Now, how will this whole thing span out? I'll be very brief, but this is a very essential video if you need to understand where the US markets are headed from here. In one scenario, Trump keeps to all his pledges, and as he said, he would in his acceptance speech. If so, he will dent the confidence and the economy. Full-throated tax cuts could blow out the US Treasury yields and could destabilize the financial markets. Tampering with the Fed's independence would worsen that. A sign of it was Jay Powell's comments that he would remain no matter what in the Trump era till his reign comes to an end. And quick-fire tariffs risk igniting a trade war, which would raise the domestic prices, hurt the US exporters, and could also bring down the global demand. In the second scenario, Trump's most extreme plans might be curbed or delayed, for instance, by lobbyists, advisors, lawmakers, whatever you would like to call it. This would be, of course, better for the animal spirits to sustain for a longer period of time, and less harmful to the US economy and also the global economy. In this scenario, the Trump's less radical tax and, of course, the regulatory cuts prop up the investors, while the impact of import tariffs are less intense as businesses have time to enact contingencies or before they are diluted. Wall Street is currently pricing in this more restrained forecast, this second scenario. Please make a note of that. There is also the most sanguine script, the third one. Trump's tariff plans turn out to be mostly a negotiating device, quite possible. A transactional approach might see import duties imposed more selectively. His administration may also better target and prioritize his tax cutting and red tape slashing agenda towards the lower and middle class and investment. Okay. This might, of course, mean that the economic fundamentals are intact or even stronger come 2028. In all the scenarios, Trump's, if he dilly-dallies, not sure, various suggestions coming in time to time, then that could mean more uncertainty for the markets, and market volatility will become a regular fixture. This could act as a drag on economic growth as well. But it is a sign of just how topsy-turvy the US policies have become, that the rosiest outlook may be the one in which the president-elect fails to enact what he promised voters. Knowing of Donald Trump as I do, I don't think he's a one to dilly-dally. He's a one to take decisions quickly. And therefore, the scenarios that I've outlined above will come into play. I don't think he just loves making quick decisions, fast decisions, and what he promised, I'm sure, are going to come into play soon. How the markets therefore will react, I've just explained to you. To get to know more where we are headed from here, for the US markets, you can join the Prime or Prime Plus Telegram groups. For the Indian markets, please do join Premium Plus, which gives you 10 to 12 days predictions in advance, plus some very good multi-bagger ideas and good option ideas as well. The number to get in touch, you can WhatsApp us on 982-086-1044. Happy investing and have a great week ahead. Take care. Bye-bye.